This is Andrew Stotts of A. Stotts Investment Research to talk about world-class benchmarking. In this case, I'm going to look at a company called Korea Zinc Company Limited. When I look at a company, I tend to look at it from this perspective on this page, and I'm going to highlight the first upper right section, which I'm going to talk about the background of this company first. Now, Korea Zinc Company Limited is a non-ferrous metals company and is the world's second largest producer of zinc. My God. Its principal activities are also refining lead, silver, gold, and copper and making use of byproducts such as cadmium, bismuth, and sulfuric acid. It exports around 98% of silver, 85% of lead, and 65% of zinc volumes. So it's exporter. And we can look at and understand that this company's market cap is about $8.7 billion US dollars with turnover about $17 million US dollars a day and a free float of about 43%. It's in the materials sector and has a beta slightly over 1. Let's talk a little bit about what's going on with this company. Korea Zinc is a non-ferrous smelter that also produces lead, gold, silver, copper, indium, gallium, and sulfur. Non-ferrous metals alloys do not contain iron in high amounts and are more costly than ferrous metals because of their desirable properties such as low weight, greater conductivity, lack of magnetism, and resistance to corrosion. Now, the company purchases zinc and lead ores as concentrates from mines, and then they smelt them. It also recovers precious metals such as gold and silver by reprocessing the byproducts of zinc lead smelting. Korea Zinc features the highest recovery ratio among the world's smelters. Well, it should. If it's number 2, it's massive. As of year-end 2015, its 650,000 tons of zinc products a year include slab ingots, alloy jumbo blocks, anode ingots, and die casting ingots. Besides its domestic operations, it has a distribution network to China, Japan, Taiwan, Laos, Thailand, Singapore, Australia, UK, South Africa, and America. Massive reach. However, the majority of its overseas revenue is from Australia. So now let's look at this revenue breakdown by metal. We can see zinc at 36%, silver 27%, and lead at 17%. Gold 10%, and copper 3%. Now, why are we looking at this company? Because I want to show you about its profitable growth, or what I call world-class benchmarking. So again, world-class benchmarking looks at a measure called profitable growth, and I look at the period of 2012, 13, 14, 15, and the past 12 months. And what we can see is that profitable growth improved to number 1 from number 2, and that's when we benchmark against 740 large material companies worldwide. I call it world-class benchmarking because I'm not just comparing against global or regional or local peers. Now, where did this strength come from? Well, first of all, profitability has been number 1 ranked for the last 3 periods. We can see that actually growth has been only 5, or an average rank. Now, where did this come from? Well, we can see that sales growth is 4 and margin change is 5, so it's pretty mediocre. And if this company really, what we can see is sales growth rising from 6 to 4, so maybe we'll see that this could increase. But the profitability in this company comes from a very high profit margin. So, do you want to see the profitable growth rank for a company in your portfolio? Well, just leave a comment below with the company name and country listing, and I'll post it if I have it.